you're a W-2 employee, there is one key item you must understand in order to evaluate your taxes appropriately, and that is how changes in your income affect what you're going to owe and the decisions you have available to you. That's what we're taking a look at in this video right here. My name is Matt Speckman. Welcome back to Taxes Suck. Thanks for joining me. I am a CPA. I own Advantage Through Accounting. We do tax planning and tax preparation for folks who need it. And in this case, we're talking about our W-2 folks. They receive income on their pay stubs. You get paid through your employer. You have a distinct advantage versus self-employed and business owners who have to do this a different way. You get taxes taken out across the course of the year. Now, you may not call that an advantage because what you're seeing is your tax coming out and how that lowers your paycheck. That can be really annoying. But what you don't have to worry about is calculating your own tax payments. That is a huge burden on on business owners, and it's something as a W-2 employee you don't have to worry about. So what are you concerned about? How your income's gonna change. Now, you know your salary level, you know if you got that raise, you know the basics, the high level stuff, right? You're not gonna not know those things. But do you know how those impact the decisions you have? How much more in taxes should you expect to pay at year end, regardless of what's getting taken out of your paycheck? Should you be upping your retirement contributions to minimize how much of that additional income is going to get taxed? Do you have access to tax advantage accounts that you might be able to leverage? Are there other insurance changes or things like that on your paycheck that you should be addressing because of your income? Could you afford more life insurance? Again, there are decisions to be made, and it all stems from simply understanding how the income change is going to affect things. So in this case, let's assume last year your W-2 income was $90,000 and you got a nice big raise, and then this year in 2026, that's terrible, you're gonna make $120,000. So a nice healthy raise, a lot of stuff you can do with that type of increase in income. But if we're talking about our taxes, what's the first thing we know? You're gonna pay more in taxes. You're gonna see more come out of your paycheck. At the very beginning, at the very start, you need to have a plan for what that means for you. Are you comfortable with that? Are you gonna be somebody who just complains about it, like, why do so many taxes get taken out of my check? Or are you gonna be the person who goes to learn and understand what that actually means for you? Control what you can control, right? So in this case, we have $30,000 more in income. We can expect to pay, let's just say, another $5,000 in taxes than we were previously used to paying. Price of making more money, right? So in that case, we have a plan for it. It's coming out of our paycheck. We don't have to worry about making our own payments, but we want to understand what that net number is going to arrive at from a cash flow perspective so we can understand how we might be able to use the remaining cash. In this case, what you're going to have with the W-2, you're paying for your insurance, you're paying for HSA, you're contributing to HSA, you're contributing to 401k, and these are all components we want to be thinking about. HSA contributions. Are you in a high deductible health plan where you have access? Are you contributing to your HSA? Can you boost that amount up? What about your 401k? Let's say we like those tax advantaged retirement accounts. So each month we make $30,000 more dollars. We're gonna put 10K more into our HSA. That's gonna save us $2,000 in taxes, right? If that's a strategy that makes sense for your profile and your retirement profile, where you're heading, if you've planned that out, this can be a huge, huge benefit to you as you start to make more money. It gives you a lot of options with these retirement accounts. We won't talk about the Roth IRA, a different type of account, but there's ways you can leverage that as you get more money, and just make sure you hit the contribution limits and push yourself towards a more comfortable retirement. And same thing, we have other options we can think about here. Is there an insurance plan you might be able to afford that's a little better? To understand the cash that's going to be available to you at the end of the day so you can leverage these other options you have at your place of employment. We can get to other decisions beyond this, but again, we start at the income change. You have to understand where your income is going to fall in order to make the other projections that come along with it, in order to understand how to improve or adjust these items. And by doing that, you're going to put yourself in a position to be proactive, really leverage these things in a way that's advantageous to you, and keep you on track each and every year to reach the retirement or the savings goals that you have.